What's up, YouTube? Listen, family, it's Sunday night, which means it's almost Monday, which also means it's almost time to get back in our bag and do what we do, guys. Listen, man, you guys know I get excited when Sunday night is approaching because that means market open is right around the corner. Without further ado, guys, we got a jam-packed video, so keep it locked. I want to kick things off, guys, with the fact that in the futures market already, we have this note right here. The Dow futures fall 170 points to start the week. Okay, now listen to this, guys. I always tell you to make sure you check the futures 2 times for me. One time at 6 p.m. Eastern time every night, and especially on Sunday nights going into the week. And then I want you to check it again in the morning around 8:30 to see has anything changed with this information. For instance, so right now it's down 170 points, so the market is going to be crash if everything stays the same when you guys wake up in the morning. Okay, however, overnight you need to check it because something come out the blue and this could say futures reverse up 500 points as we go into the new week or something like that. So always check it. But for right now, we're going to go with what we've been given. And right now we're down 170 points with key inflation data and earnings ahead. Speaking of earnings, guys, we are kicking this week off with earnings season. Every 3 months, companies have a chance to report, kind of tell us what they're doing right out of their mouth. And so again, fundamentals will be back on display. Fundamentals will be back in focus, which means that after this CPI report that comes out on Thursday, okay, everything will be focused on what are companies actually saying they are doing, what are they seeing, and what guidance are they giving. Okay, all of these things will be the new market movers for the upcoming next couple weeks. Okay, be looking for more downward pressure, but don't rule out a reversal, short squeeze, or a pivot of some sort in the market. Okay, not with the Fed. The Fed won't pivot, but the market, because it's so oversold, might try to do a little bounce after it go down to start the week out. Okay, also, guys, this week we have again a jam-packed week. A bunch of Fed speakers will be speaking throughout the week. We got earnings I just spoke about kicking off this week, but we also have continuing jobless claims that's come out at 8:30 on Thursday. And we also have the CPI report. You guys remember what happened last time on the CPI report? It came out, it still showed that it was relatively high, and the market at that time was booming. But when that 8:30 report came out, the market crashed. And when I say it crashed extremely hard. Okay, it remains to be seen right now what will happen. That's why you got to be locked in. We have to be paying attention to what the report actually says, because that's what's going to guide the Fed next move. But then over here, for everybody that's trying to make money off of these things, we are going to react to what we see. So if the market want to sell off, guys, we'll ride that wave down. If the market wants to rocket back up and try to go test some gaps that it might have left with these more recent sell-offs, we'll be on the wave riding it up as well. Okay, be flexible and nimble in this market. That is how you succeed, especially during a bear market, especially during times of high volatility. With that being said, guys, I want to kick it off with the SPY, ticker symbol SPY, currently sitting at 361.95. Okay, listen, this week we could see this again test the lows, and the lows of this would be, let's go ahead and take a look at it. Okay, the lows would be at least 357. Look at this 52-week low right here. Look for tomorrow, as early as tomorrow, I would say 358 to 357 to be tested. Okay, taking a look at the 1-week chart. Okay, look at this whole pattern. It basically came full circle. It was down at 360 to start the week. It went all the way up to 377 here, a little higher, 379 here. That's called a double top. And then, guys, we love these. Then it came right back down to, guess what? Right back to this 360 level. It just made one round trip. You have to understand what the market is doing. If we go ahead and look at a year out, look, guys, we have already broke this low right here of 366. And we got one more that's in focus at 357. I just showed you that. That is what we're looking for to hit maybe as early as tomorrow, possibly Tuesday, but at some point this week. And then guys, we don't rule out a bounce, but the bounce will be faded. Faded means Wall Street will come and sell it and push it back down. So don't get hit with the pump fake. That's where that stuff comes from, okay? After we break 357, then you guys got to look for that 355 to 350 level as your next levels of areas that's going to be tested on this week, okay? Then guys, going over here to Apple. This is one of the strongest stocks right now. Still going down with everything else, but holding up and still hasn't hit those lows like other companies have in the market so far, okay? But sitting here at 140, guys, we're looking for this to come back down to 138 on tomorrow, hopefully, if we get the right downward pressure, okay? And then if it can break through 138, guys, look for this one to again go to maybe 135. But check this out. Does this look very similar to the SPY? This is why I tell you guys everything flows from the SPY. This is Apple, but I just showed you the SPY and they look identical. This is the 1 week chart right here, okay? Get in the habit of mastering line charts as well as candlestick charts, okay? Line charts are more clean, okay? I dominate both. It doesn't matter. Fall in love with whichever one you're more comfortable with. Line charts are just more clean. The candles has all the wicks and things like that. All of it is helpful and all of it helps you make money. Let's go look at this. Apple was 138 October 3rd, ran up to 145, hit 147. Similar thing. We call this a double top. It showed the bears was waiting right here at 147, smacked it back down. That jobs report came out, guys, and this came all the way back down to 139. Full round trip once again with Apple. It looks identical almost to the SPY. This is why I tell you guys things like everything flows from the SPY. So no matter what you guys doing, I teach you one of the major points of focus in the market, which is the S&P 500, because it will largely dictate a lot of what your other individual stocks do, okay? So without even having to look at Apple, I could know what Apple was doing because I'm always mastering the SPY. I'm always focused in dissecting the SPY, okay? Looking at a year out, check this out right here. This will be a target area we looking for with Apple, 130. Okay, we're not there yet, so that's why I said everything happens in levels. So right now we're sitting at 140. We're $10 away, so look for steps. 137, 135. Okay, then you might get a bounce back to 140. Then it'll make its way to 133, and then it will come to 130. Okay, that's how the market goes. It doesn't move in a linear fashion. It doesn't move in a straight line. That's why you guys have to be disciplined. You have to be patient. More importantly, you have to be surgical. And then last but not least, guys, is Tesla, ticker symbol TSLA, sitting at $223.75 at close on Friday. This one could not find any support anywhere. Let's go ahead and look at this 1 week out. Okay, it dropped and it kept dropping. This is what we call a falling knife. It just 254, 248, 234, 230, 220. Guys, it's headed for 220, then it's going to head for 200. Okay, that's just the natural cycle. Yes, it might get some pops, but right now we're in a downtrend, so respect the trend. Matter of fact, on the year, Tesla's down 15%. If you want to know where it's going to go, look at these two previous lows, 209, 215, 213. Mark those levels out so that you know to the downside, meaning if CPI report comes out negative, if we don't get a bounce, if earnings is bad, these are the levels that the stock will go to first en route to falling to 200 before possibly going lower, like to maybe 150 or 140. Okay, but it's all a process. That's why I tell you guys, you either need to be in cash, you need to either dollar cost average, or you just wait till stocks hit certain price targets that you like. Then you establish your position and you ride them back to the upside. Listen, guys, we got a jam-packed week this upcoming week, okay? The market may be very volatile, so it's going to be important, number one, that you join us in the Discord. Link for that is in the description below, okay? So that you can get some real-time guidance from myself as well as our excellent pro investors that will be holding and walking alongside you along this journey, okay? Making sure you guys are navigating properly, making money, and doing your thing, all right? With that being said, the moves in the market can be very volatile. Keep an eye out on the VIX, okay? Keep an eye out on the dollar. Those will be your signs, whether they're going up or down, for you to know what's going on with your individual equities, okay? All of these things kind of tie together, they kind of go together. It's your job as investors, as retail investors, to make sure that you're abreast of what's going on so that you know how it affects you and the moves you're trying to make, okay? Listen, guys, we make videos like this every day, so if you like this one, make sure you check out the next. Remember, most people see the end result, very few consider the journey. So do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.